to push us forward as well now to our options insight. We're 40 minutes away from that closing bell. I want to get you up to speed with the day's options trading. Joining me now, John Sinclair of Positive Trends Research. John, what are the charts showing you about the recent run-up that we've had and the sustainability of it?
Right. Well, the last run-up, the summer run-up was pretty intense. And in fact, a couple months ago when we were on Bloomberg, one of the things that we pointed out was that we were really far away from the macro downward trend line of the market, and it seemed like it would take forever to get there. But it really didn't take that long at all, and we ended up pushing up with a lot of force up to that level. And what was really interesting is not only did it come up to the 200-day moving average, but not only did it come up to the macro downward trend line, but it also hit the 200-day moving average at about the same time.
What do you make of the rejection of a 200-day moving average and the significance of that?
And so one of the things that we like to look at is confluence, right? So just trading off of the 200-day or the 50-day in and of itself may not be enough, although sometimes it does become a self-fulfilling prophecy. But when you have the confluence with that type of geometry, a lot of times that can give us some indication that there will at least be some movement. And from there, we look at market events that are happening. For instance, the Fed, and of course, last week we had Jackson Hole. Now, it looked like that the market was getting ready to push back up, and then the volatility was injected right back in on Friday and gave us a little bit more intensity to the downside.
What do you make of the options expiry, then the negative downside from that? And then, of course, last Friday, some big negative downside after Jackson Hole. But as we were noting with our previous strategist, not the massive follow through today that would signal confirmation of that.
That's true. A lot of times, one of the things that we like to look at is how intense the move was the day before. I don't think that the conversation that Jerome Powell had on Friday was enough to really, send the market crashing. It was more of like we were expecting volatility one way or the other. In fact, the market shot up initially, and it's very possible that the market could have gone up depending on how it was interpreted. One of the things that we do like to look at are the levels, and when we kind of dig into the market profile of it, we want to see how thinly traded it was at certain times to see if there'd be a rally back up. So that certainly is still a possibility, although a lot of times after a big move, if we're not seeing a major flush, we'll expect some sort of choppy behavior, which is what we're seeing today, and it could be potentially a bear flag.
I need you to help me explain a debit spread and a trade today that you're looking at when you think about some of the puts and the calls.
Sure. Well, a debit spreads when we're trading options. A lot of times, if you're looking on the long side and just going straight directionally, one of the things we do is we look at buying the nearer term option or the nearer the money option and selling the outer the money. And so a lot of times that gives us a little bit more control, and we're not as affected by the theta decay or the time decay and a lot of the volatility. So it allows us a little bit more control and doesn't give us, in the options market, we don't see as big gyrations in the price action, and it allows us to be a little bit more predictable. So when we trade those options, it gives us not necessarily a little more security, but it gives us a little bit more predictive control of our trade. And so when we're looking on the short side, so for instance, what we'd like to see is when we see that confluence at that macro downward trend line and the 200-day moving average, what we might do is look for a high open interest SPX option strike and look to trade a debit spread to that.
John Sinclair, really appreciate it. Smart, helping me walk through all of that of Positive Trends Research. Really appreciate it. Thank you for joining me for Options Insight today. And from New York, this is Bloomberg.